Hey, good evening, everybody. How are you? This is Rick with Hit and Run Candlesticks, and I want to welcome you to the Tuesday public e-learning slash webinar. Let's Claude there asked about Gigi, and let me just clear the air before we get going. Yes, he did pass away yesterday. So yeah, and as Ed said, a tremendous loss. Tremendous loss. Alrighty. Glad to have everybody here. Thank you very much. Again, welcome to the public webinar. Here in a little bit, I'm gonna pass out a link to you. In fact, you know what? I think I'm just gonna give you this link right now. And if you register, it's a registration form. And what it will do is I've got 35 stock picks for you if you want to take a look at them. And there's no way we're going to be able to get through them all tonight. The majority is short. There are some longs. They are noted longs. You'll see a line in there, but if you register for that, you'll receive that. Just kind of a thank you. Just a thank you for coming into the webinar tonight, and I appreciate it. That is not being sent to, everybody. That is being sent to just the folks in the webinar. So thank you very much. All right, let's talk about the market real quick, and I'll post that link also a little bit later as well. Let's talk about the market a little bit, and the SPY had a bit of a rough day, as well as the entire market had a little bit of a rough day. Real quick, this blue line is the 50-day simple moving average. The orange line is the 34 exponential. This black line here is the T line. That's the 8 exponential moving average. And this big red line is the 200 simple. This is also a 200 period moving average as well. Anytime I have the T line below the 34, I consider that a bearish scenario. Now, what's important here to understand is that is based on my trading. That's based on my rules. You're more than welcome to use that. There may be other ways you determine what is an uptrend or downtrend. And when I'm looking at the trend, I'm strictly looking for my personal trading. I'm not looking for, well, hey, is the market in a downtrend or in a bullish trend? All I care is, how is it for me? And that's how I think each person should be looking at it. How is it for you? How does it compare? How does it fit in to your trading world, not somebody else's trading world? So when you hear, the radio, TV personalities, or anybody for that matter, if they say, well, the SPY or the Dow or the S&P Russell, it's in an uptrend, you need to look at it and you need to decide what is the trend that it's in, and not just assume somebody else is right. And they may be right, but again, that is based on what they are looking at, not what you're looking at. So very important there. So I see the T line underneath the 34. I'm still bearish on this. Before the open today, I was almost ready to be. I was prepared to be bullish, because the gap up yesterday, even though it failed the 50 up here, the T line was still trying to come through that 34. So all it would take was a little bit of bullishness today in price, and the T line would have been up there, and that would have been the first time in quite a few days here. So, but that just didn't work out. The open was down, and it just did not go up at all from the open. It pretty much opened and went down. That drug us back down and put pressure on the chart, and now that puts us back into a short-term downtrend here. So also what we have here is what we call a blue ice failure. Anybody that knows about that, and we may talk a lot about that tonight, we'll see. but that's the 50-day simple moving average when price fails that 50. And this 217.54, this is the number that the bulls need to get through before I was to become bullish on the overall market. That would be very healthy if we moved up there. Obviously, that didn't work out. The 214.50 area here, if we start to see a relief rally tomorrow, let's see here, something that might look like this. There we go. Say the market started to do some sort of a bounce. Anything below 214.50, I'm going to still consider extremely bearish, not bullish. If price was to move over and close tomorrow, the next day, or the next day, then I will look at that as the bulls are trying. They're trying to put it together. They're trying to get their game on, and we might look at we might look at more bullish trades than what we might right now based on what the market is doing. So right now for short-term swing trading, I think traders should be looking at some shorts, getting rid of some of your longs, taking some profits on your longs. The idea of you being in a long, let me use myself, okay? The idea of me being in a long and it looking real good while the market is under a lot of pressure, that's something that I have to rethink. I may keep a few shares, but I will get rid of the majority and take the profits because it's just a matter of time. When there's pressure on the market, there's a lot of charts get pushed down, even good ones, for no good reason. And why give up those profits? So I did that today. I closed out of some positions, some longs, took a few little losses, nothing big, nothing dramatic, but I sure feel better about the positions I'm in now. Alrighty. Hopefully tonight, please feel free to ask questions. I do what I can to answer them. And like I said, if you registered on that link I posted up there, then a little later tonight you'll receive a list of about 35 or so trade ideas. Majority are short. There are some longs, but the majority are short. So here's AMBA. It has a double top. Great, CJ, thank you. It has a double top, and we've got a pretty good move down through the 50 today on pretty darn good volume. And that's suggesting the sellers are taking a little control here. So, what you might want to do, and this is true with just about all the charts we're going to look at. There may be a couple that are a little bit different, but for the most part, you can set up a trade plan based on what I'm going to show you here. I'm going to take this line here, and I want to know where a possible target is. Now, some people may look at this and look at that as a target, but I don't consider that a target because that's only that's under 5% away. And if I'm going to buy into a chart, if I'm going to look for a target, by golly, I'm going to look for more than 5%. Now, it's possible I only get 5%, but I'm not going to start the game off with only 5%. So I do not feel that is a reasonable target. I feel that's an area to test, but I also feel there's failure afterwards. So I'm going to continue to move this down. And I see one area right here that there's a little bit of congestion in there. Now, I don't think that's where we're going to. I think that we're likely to go closer to this level here and meet up with this dotted line. So based on a weakness below today's close, all the way down here, that's more like 13, almost 15%. That's more what I'm thinking about a target. So if you're buying this, what a great place for a stop up here at 69.30. Somewhere like this. Now, I would look for an inside day buy, so a short, and then just carry it on down. There's nothing about this chart that looks bullish right now, so I wouldn't be afraid to do that. You can certainly catch it on weakness to the downside, anything below today's close. I'd still use this as a short or as the stop. Anybody using an area like this for the stop, to be honest, I think you're just asking to get stopped out. You're begging for it. So, when you look at charts, if you believe in the chart, if you believe in your chart analysis, then you won't be afraid to put the stop so you don't get stopped out just because of minor noise. So let's see. Is the 100 moving average important to you, Rick? No. What you see on my chart is what I look at each and every day. There are several charts I look at. One might be the naked chart right here, and this is my other chart right here. And these are the charts I look at each and every day. And I do not have the 100 simple up there. Now, what I want to mention that, talk about this since you mentioned it, the 100 simple. Moving averages are not the reason price stops or goes. Okay? It's price action. Now, price action, it looks at moving averages, and moving averages certainly might cause a little bit of consolidation up or down, but it is not usually the reason a price stops and reverses. So keep that in mind. Moving averages, however, work very well as targets. They work very well as targets. Let me back that up a bit. Moving averages work very well as target directions. Target directions. And and here's another. Do they work? No, TM, they do not work well as support. Moving averages were never meant to be support, nor were they meant to be resistance. And here's what I want you to do. Anytime you think a moving average is support, I want you to look at that chart, and I want you to draw a line at that moving average, and I want you to move across, and I want you to count how many places you count support or resistance. Remember, it's just an average. That is not what turns a chart. What turns a chart is true support. Things like, let me get some colors up here. Things like this, true support. Look at that right there. I might think of that as support. And is this support? I don't know. Let's see. We know it's not support to the right. How about to the left? Look at that little shelf that it built right there. It's not the moving average. It's not the 50. It's not the 34. It's that price has come down to support or up to resistance. I know a lot of people use moving averages, and I do too. They're terrific for getting an area, but you need to fine tune from that point. So right now, I'm looking at AMBA as a short, looking for the direction toward the 200-day simple moving average, and that's the red line. You're welcome. Thank you for the question. If you're able to pick out an entry around 65.60, then I think in time and proper management, you could be seeing a 23% profit with this chart. Now, I do not think by any stretch of the imagination that this chart's going to do this. I don't think it's going to go straight down there. I could say that with just about every chart because the probabilities are very, very high that it's not. Somewhere along the lines, like near some support, you're going to start to get a relief rally. That's normal. This would be a good place to take some profits, and then this would be a good place to look for shorting it when it rolls back over and continues its move down. Okay? So, again, there's no way we're going to get through all these tonight. No way at all. But I'm going to go through just a few of them here, or any charts you may have for me to look at, and see if I can't help put some charts out there that everybody can make some money. Here's SUPN. SUPN, if you look at this chart here, we've got a nice evening star. We actually have a double top up here. Now, I know somebody's looking at this and saying, you know, where did I buy my glasses at? Now, I want you to think about something. That does a double top have to be exact? The answer is no, it doesn't. When you're drawing trend lines, it's important to draw a fat line like this.